Good morning, Alex Cole. How are you on this fine Friday, April 9th, 2021?
I'm fine, thank you. How are you?
I'm doing great. Spring is blooming in the air, and stocks are pulling back out of their choppiness from the last few weeks. It's still a little messy out there, which is why we want to review the Flight Path newsletter that went out from GoNoGo Research on Monday morning. Let's see how things shaped up for the week. Right now, it looks like we're digging into the sector RelMap of the S&P 500 to see what's gaining and what's losing on a relative basis.
Yes, the spring is in the air. The daffodils are coming out. Hyacinths are out, smelling lovely. Not so much for the leaders of the S&P in terms of the sectors. The S&P had a great week. Broke over 4,000. Obviously, there was a lot of talk about that, but most of the sectors that we were seeing leadership actually painted an amber bar at the end of the week. So the stock market at large outperformed towards the end of the week. So that's something just to keep an eye on. Remember, that's not a trend identification. That's a move into a sort of neutral area for some of these sectors. But you can see it with materials and financials, all of those ones that we were looking at, utilities, painting an amber bar. And we've seen some real change in things like energy. Energy is actually now in a weak no-go. So some change to be noted on the relative map here. But overall, again, remember that means relative to the benchmark. Benchmark finished really strong at the end of the week. Doesn't mean those sectors are not in go trends on a pure go-no-go trend chart, but relative to the S&P, with the S&P finishing the week so strong, they're showing some neutral bars, and in the case of energy, actually a change to a no-go, relatively speaking.
Fantastic. And we're still seeing that leadership from the industrial sector. Communications still outperforming, and it's helpful to really understand the constituents of each of these sectors and the industry groups that they represent. So communications, obviously, being including Netflix, Facebook, some of what many would consider mega cap technology names, but they're not in the information technology sector. So it does help to drill in on a granular basis to what we're seeing. But that top level view, obviously the index performing well broadly, measures of market breadth still very strong. And so on a relative basis, those sectors pretty flat with the index as a whole. Pretty widespread participation.
And well, you mentioned technology there. That was one other thing on here, that the technology has painted an amber bar coming out of a no-go. So there's a big rally in mega cap tech last week with the Qs and Apple and some of those major companies that are in the tech sector doing really, really well. So that's the flip side of this. The tech sector perhaps coming out of the no-go and painting an amber bar from the other side. So keep that in
mind. Yeah. For readers, we want to help people get away from their home bias. And one of the charts that I think is telling an important story around the health of the global equity rally is coming out of China. So the MSCI China ETF held some pretty important support levels over the last week. Let's see how that has performed so far through this week, now that we're pulling through into this second quarter of 2021. MCHI on a weekly basis.
Yep.
Sorry about that.
No, that's okay. I just I was looking at it from, you said support and I was seeing resistance. So like, it's Friday morning. I know it's Friday morning, but my mind is not playing that kind of trick. But on the daily, we'll come back to the daily, because within the longer term perspective, we'll want to look at the daily for potential entries. So from the longer term perspective, trend is a go. Riding the zero line at the moment, we would expect that to act as support, as it has before, if the trend is healthy. And with the resurgence of the sort of global equity markets this week, there's a possibility that we'll bounce off this zero line and maybe this trend continues. In which case, then we'd go to the daily chart to pick up on what might be some bullish activity. We'd be looking for whether the oscillator on the daily crosses above zero from being below, lighting that zero line on the daily. We did see some slight bullish divergence with price making lower lows, the oscillator making slightly higher highs. So a break above zero, perhaps then a color change on the daily go-no-go trend would be an opportunity for people to take part in that longer time frame, if indeed we do find support here and rally.
Yeah, we're seeing that that consolidation play out perhaps in a longer term and sideways move. We haven't seen precipitous decline in price action last week. So the note that went out Monday morning, we did have a higher close for last week. Seem to be continuing this consolidation, slightly, drifting slightly lower for this week, but still on the weekly basis, intact for a long-term go trend. So let's move right along. One of the factors driving some of the weakness in emerging markets has been the dollar strength. U.S. dollar outperforming in G10 baskets, really seeing some strong price performance in that chart of the DXY.
DXY chart we've really fallen in love with over the last few months. It's been a chart we've looked at a lot, and it's been a chart that has played out incredibly nicely from a technical perspective, and indeed from a go-no-go perspective. And we're looking at the same thing here. So the dollar has been able to establish, we were talking for months, would the dollar be able to establish this go trend? And it's been able to paint the go flag and then find some low risk trend continuation icons, which indicate that the momentum then was coming back in the direction of the trend. So we saw higher highs, we saw higher lows. This is a really pivotal moment. Seems like every time we look at the dollar chart, we're finding it to be an important moment. But if we find support here, this is another higher low. So that's a healthy low in an uptrend if we are to set a low here. So if we can find support here and this does become the low, then that's another higher low in this move through a daily uptrend.
So just for all of our listeners and subscribers, even if you do not trade in the currency markets, there's important information here relative to how other sectors and asset classes are going to perform. So a strong US dollar is bad news. That's headwinds for emerging market stocks. Some of the commodities that we've seen in this new rally, when they're priced dollar denominated, stronger US dollar is going to be creating some headwinds for those trends. Obviously, what we're seeing on that chart is that it's been in a really choppy, indecisive environment for some time, where we're really questioning whether that was just a momentary bit of strength before a resurgence into the to the downside, into that longer term downtrend that you see on the left side of the chart. Clearly, that was more of a basing structure, and we've seen the U.S. dollar hold this trend despite the choppiness. So we're looking at this in terms of its signal for other markets as well. So even if you don't trade currencies, it's important to look to these charts for important information. So let's side by side, if you can. Otherwise, let's just pull up the EEM index of emerging markets, and that's a basket. It's about 25% of that is in China. A lot of technology names, large cap players like Tencent. And look at that. You see a strong negative correlation, right? Rising dollar, falling emerging markets, falling dollar, rising emerging markets. And so some of those important trends that were coming through the fourth quarter of 2020, relative outperformance of emerging markets and small caps in the US, we're seeing how a strong dollar has done some damage to those trends. And what jumps off the chart for you there, Alex?
Let me do some chart trickery. So,
I like it.
This dollar, this arrow, I'm going to just really quickly flip upside down, right? Because there's been a quick change here. And when we were looking at this at the beginning of the week with the price activity that was on here, we are comparing these two, and we're seeing higher highs, higher lows, higher highs. On the right, we're seeing lower lows, lower highs, lower lows.
Mm-hmm.
The arrow that I had on here was suggesting that all else being equal, we should find resistance at this zero line. And we are flirting with breaking into positive territory. So now we're looking at this and saying, look, this is interesting. We're actually seeing a tiny bit of momentum in the positive arena. And could that lead the emerging markets back into a go trend? In which case, what's going to happen here on the left is the emerging market chart leading the dollar chart in this case, because that's sort of the only difference. If you notice, the higher low on the dollar, this is barely a lower high on the emerging markets chart. And there's much more significant oscillator divergence. Here, you're not getting as much divergence. You're getting sort of equal highs on the oscillator with the highs in price, which is much more healthy for the trend that it's in. And then the oscillator, rather than being at zero, is teasing us, is trying to break into positive territory. So one of those two things will be true.
Absolutely.
One will play out,
Well, and for those of you who are good at trivia, right? A lot of those emerging market countries are heavily exposed to natural resources, commodities, and so we are seeing correlations there as well. Where Brazil, Russia, you see strong performance in countries that had large energy exposure and other natural resources. Countries that are driven largely by mining and natural resource production tend to do really well when the commodities as a large asset class are in a longer term cycle of uptrend. So lots to consider there. Yeah. Really appreciate the fine grain analysis, and we'll be watching this over the next couple of weeks. Thank you, Alex. So let's look again at an S&P chart, little RelMap of the U.S. equity indexes. So just comparing S&P, Nasdaq, Dow, and the Russell.
Oh, sorry.
That's okay.
That is not it.
For our listeners and subscribers, we want to be looking across global indices and across asset classes, but also comparing the U.S. equity indices tells you what style and flavor is outperforming in terms of the asset allocation of large fund managers. We've seen some relative performance in small caps. Obviously, a strong rotation into cyclical sectors so far in 2021 as the vaccine rolls out and there's anticipation for the reopening of the industrial economy or the economy that's more closely correlated with recession and expansion. So as we're looking at that expansion, we want to see where trends are performing in terms of the equity indices, and they obviously have pretty wide-ranging characteristics between the four. And if that chart isn't available, we can always pull up just an S&P chart, and we can go through them individually.
Yeah, I must have been playing with this over the last couple of days. So I had flipped these to emerging markets and the FTSE. But this top panel, we can do whichever way you want, Tyler. Top panel is now Nasdaq and the Russell in the middle.
Actually, what we're looking at on our screen is the RelMap of the cryptocurrencies, which we were going to get to in just a minute. But I think the screen that you're sharing is for our next part of the chat.
Still trying to get used to this streaming world. Give me a second. I'll share the appropriate screen.
No problem, because we're going to dive into cryptos here in just a minute and some pretty exciting moves, both on a relative and absolute basis. But in terms of the equity performance we were seeing in the last week, the last several weeks, Nasdaq underperforming, and that story that profit taking in the large cap tech names was driving some selling pressure for the Nasdaq 100. Obviously, no exposure to industrials and resource dependent names in that index. Dow had outperformed on a relative basis for several weeks, And we might be seeing that turning point as we enter the second quarter. There's a lot of new allocations, a lot of rebalancing for large institutional fund managers. We've seen that Nasdaq pop back. That's been a big story for this week, and we're looking now at that RelMap and some big changes for the Dow this week.
Yep, one sec. So this is like I said, I've been playing with it. So, okay, so now what we've got in here is the Nasdaq, the Dow, and the
Russell 2000.
2000. There's a bit of a bug here, which I'm noticing. The top panel is not getting colored with the GoNoGo. We can fix that. Let me re-add that to the top.
Thank you, Alex.
There you go. Found a bug. It's always good to to find these things and then fix them for people.
Yeah.
So go ahead. Sorry.
Especially while we're live streaming. So for all of you who are TradingView users, you can send in your tickets to customer service. There we go. We're ready.
We did it. We got there. This is the chart I think you were asking for, and Nasdaq top, Russell in the middle, and Dow Jones in the bottom. And this is what we've been talking about, is that it's the industrials that has been outperforming when we look at these different segments of the equity markets, and that continues. It's weakened a little bit because we have seen such a strong rally in the S&P this week, but still the Dow Jones Industrials on a relative basis in a go trend to the market as a whole.
Dow outperformed. So what the chart is showing us is that the Dow is outperforming. The trend of the outperformance has weakened a bit, but outperforming the S&P 500, and then small cap and the Nasdaq still showing weakness relative to the S&P 500. Yep. If we move along to what's driving the Dow Jones. Could we jump into just a daily chart of the Dow Jones Industrial Average, and let's just see where we're at in terms of overhead resistance and potentially some headwinds for the Dow coming up at these levels.
That was a lot easier. Look how smooth that transition was.
Well done, Alex.
Thank you. So this is the Dow Jones Industrial Average. And I like the look of this chart. It's something that we talked about in earlier in the week, the break above the prior high here. And we are now consolidating at those levels. So that was actually, I think, what we talked about in the flight path was, I'm pretty sure that we'd seen the break, or we talked about it on Monday, and then it was, will we consolidate now at these levels? I think when we looked at this on pre-market, we were sort of butting up against resistance, and we were wondering what we could do about it or what would happen. And then when we broke on Monday, the question is, do we now consolidate at these levels? And if we can consolidate here, remain in positive territory on the oscillator, then there really isn't much above in the way of overhead supply, but there really isn't anything. We're at all-time highs. So
excellent. And still in a strong go trend, still showing positive territory on the oscillator, have some good momentum signals even on lighter volume, volume being quite weak throughout this week. So that's great to see on the Dow. Let's
remember this is the index.
Yep.
So there's no volume going to be thrown into that oscillator because this is not a tradable ticker here.
Absolutely. Let's pull up the risk chart underneath that chart of the Dow, just for a quick look at how things have been with a hard-coded risk proxy using the GoNoGo trend system.
Okay, so now you let me know if you've lost that, if you're not seeing it. And if you're not seeing it, I will quickly this time get you the right screen.
No worries at all.
Okay, you should have it now. There's the risk chart.
Brilliant.
The Dow Jones in the top. So,
and if we could look at it on a weekly basis.
Yep, that's a weekly. So the risk chart, remember, is a GoNoGo trend application to a risk proxy. So we're taking the concept of trend identification using blended technical indicators and applying it to a proxy for regime change or a risk on, risk off environment. And so on the weekly chart here, we can see that risk is fully on still, completely uninterrupted bars on the weekly chart of the bright blue go trend in terms of risk on versus risk off. And in this case, we are looking at high yield bonds to treasuries.
Mm-hmm. And that's telling us that we are a go for risk on behavior. The market is, even through a choppy environment, still seeking out higher risk, higher beta names, and that tells investors where we ought to be positioning right now for the week ahead. Alex, if you've got time, let's dive through the commodities on a just a comparative basis, just a straight heat map to see the trends of the USCI sectors.
Yes, sir.
Excellent. Now, what's jumping off the chart for you here with regards to precious metals versus base metals, productive economy versus stores of value?
I think this chart has been interesting in its evolution over the last few weeks. We talked about it probably just over a month ago, or maybe 2 months ago, where we were talking about how all the commodities were in a go trend on a pure basis. But that when you looked at it relatively, that wasn't the case. And what we're seeing now is that actually there is a lot of no-go creeping in. And so you're seeing, like you said, that differentiation between the commodities that are doing well and are in go trends versus those that aren't. Mm-hmm. And we're seeing a bit of a mix, really. We're looking at the precious metals, obviously still trying to get out of their own way. Mm-hmm. The gold chart is a very interesting chart. I wouldn't mind pulling that up if you have a second, but the gold chart is forming a bit of what looks like a double bottom and is actually trying again to break out of the no-go. We'll see if that happens. Mm-hmm. But then you look down at the ones that are still outperforming, and they are things like lumber and, the ETF wood and cow. So your agricultural, soybeans, mm-hmm. base metals, corn, right? Those are some of the outperformers, but you've got some underperformance then in wheat and sugar. And then even things like oil has now started to change structurally mm-hmm. from the long go trend that it was in, mm-hmm. showing some weakness.
And so we're looking at a daily view of a go-no-go heat map. Obviously, commodities came very far, very fast. And for those of you who were paying attention, there was some rattling of the cages in terms of inflation expectations. Mm-hmm. Big move in Treasury yields. Big relative to where we are. Treasury yields not being high, but they moved higher quickly. And certainly the commodities index tell us that pricing is reflecting some inflation in the environment. Whether that was actually going to move the Fed to a more hawkish policy, certainly not the case. Jerome Powell has come out repeatedly to say that we're actually looking for 2% inflation and going to be accommodative for the foreseeable future. So in terms of how that added to relative volatility in the equity space, we're keeping an eye on these commodities trends. And if we think about the longer term view, structurally commodities have been down for years, and we might have found a little basing. We've seen some relative outperformance of commodities going through the end of 2020 and into 2021. And so we want to keep an eye on that and stay with commodities trends. These also are important charts to understand where we want to be allocating our equity positions in terms of countries that have a much stronger commodities exposure. As I mentioned, Canada and Russia and Brazil and many others where you're going to start to see those equities outperform. Alex, you mentioned that the gold chart is really fascinating, and maybe we save that one for the final chart looking into next week, or we could dive into it right now if you'd like to. But certainly interesting to see what precious metals are doing, but also gold mining stocks as a canary in the coal mine, so to speak.
Yeah, let's leave that for next week. But keep an eye out. If you're looking at it, there's a double bottom there. So we'll see if that plays out.
Wonderful. Can you switch this same view of the GoNoGo heat map to a relative strength map? So all of these individual sectors relative to the benchmark USCI index. If that's a quick switch, we'll see where all of the leadership has been coming from. So these are the absolute trends of each sector. And then when we switch it over to the relative side, you'll get to see just where leadership is coming from. And for a long time, it's been the oil and natural gas story. That's where we've seen a lot of that's just pulling the rest of the index up. And that's certainly continued, though we've seen that U.S. oil and nat gas have come too far, too fast, perhaps pulling back from their absolute trends. So here we go on a relative basis. Look at that, dropped into amber this week. Alex, why don't you walk us through this GoNoGo relative strength heat map?
This chart is sort of where you really want to go next to understand what's driving the commodity markets. Like you said, we've seen some basing, we've seen some strength and some rallying in commodities as a whole. And what was driving that? Well, it was really the third panel for the longest time, right? That was oil. But now we can see that there are some other commodities that are coming in, and we're rotating through the commodities. We talk about rotation a lot in terms of major moves in equities. It's healthy to see rotation into other segments of the markets, and the same idea here. We're now seeing some strength in some of these other commodities. Base metals is an interesting one there. We're talking about the reopening of the economy, and we've seen that trend emerge since sort of mid-March. And then same thing with lumber, really strengthening and driving commodities while oil takes a bit of a break, with that neutral coloring.
Yeah, for anybody involved in construction projects right now, if you're building a home or doing some additions or remodeling, that is an expensive part of your bill, and it has changed dramatically in the last several months. So nice to see that we're getting some rotation, wider participation throughout the commodities sectors. And thank you, Alex, for walking us through that RelMap. And now let's switch back to those cryptocurrencies that you've been so eager to get up earlier. I think we have definitely been talking for the last year about digital assets as their own asset class, worthy of allocation from investors of all stripes. But it's important for us to look at those trends because these are high volatility, high beta names. And for this equity rally, we get into bull market territory, wider participation. We're certainly seeing some of the craziness that comes from a bull market, the mania, and cryptocurrencies are no exception to that. Right now, we are seeing, Alex, on screen the commodities RelMap, and if it's possible, we'll switch that over back to the.
Oh, it's possible. Side. It's definitely possible. You just need somebody with a, I don't know. I don't want to be too self-defacing in the morning, but
not at all.
Somebody with a brain maybe who can drive the ship. But here you go. So this should be it now. Let me know if you see it.
It sure is. Yep. Thank you, Alex.
That's all right. So Bitcoin, top panel is Bitcoin because really everything is relative to Bitcoin. We've had an interesting couple of days. Bitcoin went amber yesterday. Looks to be in the current session trying to go back into the go. So no real alarm there. But what we are seeing and what we saw for quite a patch was Bitcoin really being the leader, and most of these other coins in no-go relative trends. And towards the right side of this chart now, we are seeing that change in terms of some of these, you don't want to say secondary, but some of these other cryptocurrencies starting to outperform on a relative basis. And the biggest one probably is, of course, Ethereum, and that's the top panel. Ethereum in a go trend relative to Bitcoin, as well as some of the others. Ripple has been doing Tether, Ripple, and even Litecoin, Bitcoin Cash, Binance. and DOT as well, right? Outperforming Bitcoin at the moment. So you could be playing the crypto market and beating Bitcoin, getting alpha from some of these other cryptocurrencies by watching the rotation on a relative basis.
And so this is a look at the top 10 by market cap of cryptocurrencies. The alternatives to Bitcoin outpacing sort of the benchmark cryptocurrency is an important signal that there is greater breadth, greater participation, and that investors are seeking yield from smaller market cap names, and they're looking for a higher beta play by investing in altcoins, alternatives to Bitcoin. So I think this is a really constructive chart for the digital asset space as a whole. I think we're seeing greater allocations from the institutional side, and certainly retail participation in the crypto space has been huge. For 10 years or more, that's been driving most of that trend. But when you start to see large institutional players allocating to the digital asset space, whether they're doing that through a basket or just to Bitcoin, that's going to drive this trend much higher and much longer. So great to see the widespread participation. That Ethereum to Bitcoin ratio was the first one to break out. So if we could, let's just take a look at a single ratio chart of Ethereum to Bitcoin, because I think that really tells the story of where investors want to be positioned in terms of the relative trend, and outperformance coming from smaller altcoins is a really constructive move for the cryptocurrency markets as a whole.
Yeah, and the thing that I wanted to point out on this chart is that's
Ethereum just to the US dollar. Right, so just looking at the Ethereum chart, but if we look at it relative to Bitcoin, there's that important breakout.
Yeah, it was interesting to the dollar as well. You've got Ethereum at new highs, whereas Bitcoin isn't quite. So that's where that outperformance is coming from. And if you look at the ratio chart here, the pair Ethereum to Bitcoin, you see that highlighted and flagged by the GoNoGo being identified as that relationship has changed.
Mm-hmm.
So that's this chart. That's a sort of an exciting change for people in that space. And then if these altcoins, you've got a long way to go before this ratio gets back to its prior high.
Mm-hmm.
But yeah, more widespread participation, better as a rule for the asset class.
Mm-hmm.
So we'll see if Bitcoin can now get back above those 60,000s and make some new highs again as well.
Fantastic. Alex Cole, thank you so much for walking us through GoNoGo Research, Monday morning's publication of Flight Path. Just to wrap up this session for the week, would you be able to pick one chart for the week ahead where you're seeing the biggest move or perhaps the best setup in terms of what you have seen for trend change and outperformance in the past? Let's go to this chart here from Wealth Charts of Apple.
Yeah, let's have a look at this. So this is a fantastic chart, and perhaps a good demonstration of using traditional technical analysis along with the GoNoGo chart. There's a lot on here, a lot to break down, but I'm loving the way this is looking, because we are seeing the comeback really with the mega cap tech. We've talked about the QQQ. We've talked about some of that rallying hard last week, coming back into perhaps technology. Even on that sector RelMap, we saw that technology has gone amber out of the no-go. And this is, of course, Apple, one of the biggest companies that is out there and being looked at. And there's so much that's happened, and we've really watched the sort of story of Apple play out with all of the annotations that we've had on this chart over the past couple of months. But right now, this corrective action that was flagged and painted no-go seems to have ended, and we've had in the last couple of sessions a breakout above downward sloping resistance after a higher low, and importantly, breaking out of a squeeze. So this is really exciting. Down the bottom here, you've got a long period of time where there was a squeeze, meaning reduced volatility, lack of momentum. And often we talk about it, that at the end of a situation of reduced volatility like that, a move can be significant in the direction that it breaks out. And so when the GoNoGo oscillator breaks out of the squeeze to the upside here, that slightly leads the go signal. And now we're in a go trend trying to consolidate above these highs and perhaps target prior highs up at 145. So we can watch a squeeze develop like this, even though the no-go is in place. And we don't have to do anything, and we can wait to see the oscillator, what it does. And if it significantly breaks in the direction that you're looking for, that can give you a heads up. And then you see the confirmation from the go signal and go trend now in place. There will be, of course, some resistance at overhead supply here, but if we can consolidate at these levels, go trend in place. It's the first higher high since this corrective action began.
Brilliant. And in terms of the next point of entry, we're in an established go trend. Would you want to see a resurgence in momentum, stronger volume? What would you be looking for as your signal? Would you look into shorter time periods?
Yeah, one of my multiple ways to do it. Yes, you could go down in time period and look for a signal on an hourly chart or anything even shorter than that. You're sticking with the daily chart. You know that let's say the weekly trend is in place. Then one of our favorite setups is to wait for the oscillator to come back to the zero line. A new trend has been established. There's a little consolidation and pullback. If it comes back to the zero line, we look for it to find support. You get that first green circle, which is a trend continuation, low risk entry point. And that's one of our favorite setups to then get into a go trend. Of course, that's the idea there, is buying a dip or buying a pullback, maybe some sort of bull flag. There's any way you can look for these in traditional technical analysis. GoNoGo tries to automate it. So the first green circle after an identified go trend is one of our favorite setups. But of course, you run the risk of there being no pullback and a go trend can go right away, which is why we call them a go trend.
Right. So great risk management and trading discipline might say take a small position here and then scale up as the trend continues. But we'll leave that to our listeners. Thank you so much, Alex, for your time this morning and for sharing these incredible tools. We look forward to seeing you again next week, and we'll talk with you very soon.
Have a wonderful weekend.
Thanks so much.